Open Country Dairy is New Zealand's second largest dairy company, but when your one larger competitor has a 90% market share, it's not a title that counts for much. Now it's asking why a company with a near monopoly of its industry feels the need to protect its patch.
Well, the reality is that this is a very important matter for the dairy industry, for the health of Fonterra and for the New Zealand national economy. And that being the case, we think it's imperative that the alternative viewpoints and in fact some of the questions and issues that might arise from the Fonterra restructuring proposal should be put out in the public domain.
And in the dairy world, they went as public as you can get. Readers of Monday's Dairy News would have found a glossy new edition within its pages. Open Country's message came via a full-coloured double-sided triptych and outlined its concerns about Fonterra's proposed trading among farmers scheme. Laurie Margrain says a share trading platform restricted to Fonterra suppliers can only drive the price down and competitors to the sidelines.
Open Country Dairy exists today because farmers had the right to redeem their shares to Fonterra, exit at full value and exercise their option to supply somebody else. That's how we got competition. Now, if you can only trade through a restricted marketplace, which is what TAFE, trading amongst farmers, is about, then we're convinced that that will have a negative impact on the share value.
In the pamphlet's introduction, Open Country says it's acting in the interests of all farmers and the entire dairy industry. It's concerned TAF will lock farmers into supplying Fonterra and stop them from potentially moving to another dairy company. So has Fonterra crossed a line from making it attractive for farmers to stay with the co-op to making it too hard for them to leave?
If it's difficult for the farmer to exit at full value for his shares, that will make it less attractive to him. That will make it more difficult for competition to become established, and that will prevent productivity and efficiency gains.
Fonterra says the move is all about eliminating redemption risk, the money it has to pay farmers who want to leave the co-op. But should that affect the bottom line of a company that collected nearly 1.3 million kilograms of milk solids last season?
We don't think redemption has really been the issue in terms of monies moving in and out in big tides. There are movements, but the movement net has been entirely positive to Fonterra. The net movement has been very positive.
Fonterra was unavailable for comment on Open Country's letter. The co-op is gearing up for a vote on the proposal in June or July, where it needs 75% support from farmers to go through. Michael Wright, Country 99 TV News.